Over 120 countries, thousands of hotels, millions of guests every single year. A name that quietly sits behind some of the most luxurious experiences on the planet. But here's the part most people don't know. This global empire didn't start with a grand vision of hospitality. It started with a failure. A man chasing a completely different dream walked into a small town in Texas in 1919 with one goal: to buy a bank. But the bank was gone. No deal, no opportunity, nothing left except for a small, crowded, unimpressive hotel filled with tired oil workers and barely making any money. Most people would have walked away. He didn't. Instead, he made a decision not because it was perfect, but because it was the only option he had. And that one decision changed the course of his life forever. Because that backup plan would eventually become one of the most powerful hotel empires in the world. This is the story of Conrad Hilton and how he turned a missed opportunity into Hilton Hotels and Resorts. The story begins in 1887, when Conrad Hilton was born on December 25, 1887 in San Antonio, New Mexico. He did not grow up in wealth. His father ran a small general store, a simple business that quietly exposed him to customers, transactions, and discipline from a very early age. Without realizing it, this environment became his first classroom in business. As he grew older, Hilton's ambitions became clearer, but they had nothing to do with hotels. His goal was to become a banker. That vision shaped his early decisions, including his education at the New Mexico School of Mines, where he developed a structured understanding of finance and business. At that point, his life seemed to be moving in a predictable and logical direction. Everything changed in 1919. After World War I, Hilton moved to Texas, a region experiencing rapid growth due to the oil boom. Opportunities were everywhere, and he arrived with a clear objective: to buy a bank and begin his career in finance. But when he reached there, the opportunity had already disappeared. The bank had been sold. The deal was gone. And suddenly, the path he had planned for years no longer existed. In that moment of uncertainty, there was only one option in front of him: a small, overcrowded hotel in Cisco, Texas, known as the Mobley Hotel. It wasn't impressive, it wasn't luxurious, and it certainly wasn't part of his dream. The hotel mainly served oil workers who needed short stays, and its conditions were basic at best. Most people would have ignored it and waited for a better opportunity. Hilton didn't. In 1919, he made a decision not because it was perfect, but because it was available. And that single decision became the turning point of his life. Inside the Mobley Hotel, Hilton noticed something others had ignored. Demand was extremely high. Rooms were limited, but customers kept coming. Instead of seeing it as a limitation, he saw it as a system problem. He introduced a simple but powerful idea: rooms would be rented in 8-hour shifts, allowing multiple guests to use the same room within a single day. This dramatically increased efficiency, and almost immediately, the hotel's revenue doubled. That was the moment of realization. Hilton understood that the hotel business was not just about owning property. It was about maximizing flow, managing demand, and building systems that extract value from limited resources. This insight would later become the foundation of his entire empire. Between 1920 and 1924, he began expanding, acquiring more hotels across Texas. His strategy was focused and disciplined: high-demand locations, efficient operations, and strong cash flow. He wasn't chasing luxury, yet he was building a system that worked. Then came the breakthrough. In 1925, Hilton opened his first purpose-built high-end property, the Dallas Hilton Hotel. This was not just another acquisition, it was a statement. For the first time, Hilton was no longer just a name attached to properties, it was becoming a brand. From 1887 to 1925, the journey followed a clear but unexpected pattern. A dream of banking, a sudden failure, an unplanned decision, a powerful discovery, and finally, structured expansion. Hilton never originally chose the hotel business, but once he entered it, he understood it better than most. And that difference is where everything truly began. And over time, this belief became his philosophy: fill the earth with the light and warmth of hospitality. In 1925, Conrad Hilton took a major step forward by opening the Dallas Hilton Hotel, his first purpose-built, high-end property. This was not just another hotel, it marked the beginning of Hilton as a serious brand in the hospitality industry. Up until this point, his strategy had been focused on acquisitions and efficiency. But now he was stepping into positioning, quality, and long-term brand building. Between 1925 and 1929, Hilton expanded rapidly across Texas. He acquired and operated multiple hotels, building a strong regional presence. Business was growing, demand was stable, and everything seemed to be moving in the right direction. It looked like the beginning of a powerful upward trajectory. But then, in 1929, everything changed. The world was hit by the Great Depression, one of the worst economic crises in modern history. Businesses collapsed, unemployment surged, and spending dropped sharply. The hotel industry was hit especially hard. Travel declined, rooms stayed empty, and revenue streams dried up almost overnight. For Hilton, the impact was severe. By the early 1930s, he was on the verge of losing control of his entire business. Many of his hotels were financially struggling, loans became difficult to manage, and the risk of complete collapse was real. At one point, Hilton was so financially constrained that he had to live inside one of his own hotels just to survive the crisis. But he didn't walk away. Instead of giving up, Hilton focused on survival. He negotiated with lenders, managed operations tightly, and held on to whatever control he could. It wasn't growth anymore, it was endurance. And over time, as the economy slowly began to recover in the late 1930s and early 1940s, Hilton started regaining stability. This period became one of the most important phases of his journey. Because he didn't just survive the crisis, he learned how to operate under pressure, manage risk, and build resilience into his business model. Then came the next turning point. After World War II, in the mid-1940s, global travel began to rise again. Economic conditions improved, mobility increased, and a new era of business and leisure travel started to emerge. Hilton recognized this shift early and moved aggressively. In 1946, he achieved a historic milestone. Hilton became the first coast-to-coast hotel chain in the United States. This wasn't just expansion, it was scale. Just a few years later, in 1949, Hilton made one of the most iconic acquisitions in hotel history, the Waldorf Astoria, New York. This deal elevated Hilton's global reputation almost instantly. It positioned the brand not just as a hotel operator, but as a symbol of luxury and prestige. The expansion didn't stop there. In the late 1940s and early 1950s, Hilton took an even bigger step. He expanded internationally. One of the earliest examples was the Caribe Hilton in Puerto Rico, marking the beginning of Hilton's presence outside the mainland United States. This move effectively made Hilton the world's first international hotel chain, a concept that would later define the entire industry. Then, in 1954, Hilton executed another massive deal, the acquisition of Statler Hotels, the largest hotel purchase at that time. This acquisition significantly increased Hilton's scale, operational strength, and national dominance. It also reinforced a pattern. Hilton wasn't just growing, he was consolidating power in the industry. By the late 1950s and early 1960s, Hilton had transformed from a regional hotel operator into a global hospitality leader. His strategy now combined scale, branding, international presence, and operational systems, creating a model that competitors would spend decades trying to replicate. From 1925 to 1965, the journey followed a powerful arc. Expansion to collapse, to survival to recovery to global dominance. What started as rapid growth was tested by one of the worst economic crises in history, and then rebuilt into something far bigger. And the most important shift, Hilton was no longer just running hotels, he was building a global system of hospitality. By the mid-1960s, Hilton Hotels and Resorts had already established itself as a global name. It had scale, reputation, and international presence. But the environment around it was starting to change, and for the first time, Hilton was no longer alone at the top. Competition was rising rapidly. New players like Marriott International and Sheraton Hotels were expanding aggressively. These companies were not just copying Hilton's model, they were improving it, modernizing it, and scaling it faster. The hotel industry was becoming more structured, more competitive, and far more dynamic than before. Marriott focused on aggressive expansion and standardized operations, allowing it to scale quickly across multiple markets. At the same time, Sheraton had already built a strong international presence, giving it an early advantage outside the United States. This meant Hilton was no longer competing alone. It was now part of a rapidly evolving global race. During the late 1960s, Hilton began restructuring its operations to keep up with this shift. One of the most important strategic moves came in 1967, when the company separated its international operations into a distinct entity, allowing more focused global expansion and management. This decision reflected a deeper understanding that global scale required specialized systems, not just centralized control. At the same time, the business model itself was evolving. Owning and operating every hotel was becoming increasingly capital-intensive. It limited speed and exposed the company to higher financial risk. Hilton realized that if it wanted to compete in a rapidly expanding global market, it needed a different approach. That shift began taking shape in the 1970s. Hilton started moving toward a franchise-based and asset-light model, a system where the company would focus more on branding, management, and operations, rather than owning every property. This allowed faster expansion with lower capital investment, while still maintaining control over quality and customer experience. This transition wasn't immediate, but it was critical, because it redefined how Hilton would grow in the future. In the middle of these changes, a major moment arrived. In 1979, Conrad Hilton passed away at the age of 91. The man who had built the foundation of the empire was gone. For many companies, this would have created instability. But Hilton had already built something stronger than individual leadership, a system. After his death, leadership passed to his son, Baron Hilton, who continued expanding the business and strengthening its global presence. Over time, Hilton transitioned from a founder-led company into a professionally managed corporate structure, allowing it to scale beyond individual leadership. This transition laid the foundation for future leadership, eventually leading to modern executives like Christopher J. Nassetta, who would take the company into its next phase of global growth. After his death, leadership transitioned to a new generation of executives who continued to refine and expand the business. Through the 1980s, Hilton focused on strengthening its brand presence, improving operational efficiency, and competing more directly with rising global chains. The industry itself was also changing. Business travel was increasing, globalization was accelerating, and customer expectations were evolving. Hotels were no longer just places to stay. They were becoming part of a larger travel experience. Hilton adapted by expanding its offerings, improving service standards, and building a more recognizable global identity. By the 1990s, the transformation became more visible. Hilton leaned further into its asset-light strategy, increasing the number of managed and franchised properties rather than owned ones. This allowed the company to expand faster across regions without heavy capital commitments. It also helped Hilton compete more effectively with companies that were already scaling through similar models. At the same time, brand positioning became more important than ever. Hilton wasn't just selling rooms anymore, it was selling consistency, trust, and a standardized experience across locations. Whether a guest stayed in one country or another, the expectation was the same. This consistency became one of Hilton's strongest competitive advantages. From 1965 to 2000, the journey followed a different kind of path. Dominance to competition, to pressure, to adaptation, to reinvention. Hilton was no longer just growing, it was evolving. And the most important shift, it moved from being a company that owns hotels to a company that controls a global hospitality system. As the world entered the 2000s, Hilton Hotels and Resorts was no longer just competing, it was operating at a global scale. But the industry itself was evolving rapidly. Technology, online bookings, and changing customer expectations were transforming how people traveled and how hotels operated. Hilton understood that the next phase of growth would not come from simply adding more hotels, but from building a smarter, more scalable system. In the early 2000s, the company accelerated its shift toward an asset-light model. Instead of owning properties, Hilton focused on managing and franchising them. This reduced financial risk while allowing faster expansion across countries. It also meant Hilton could grow globally without being limited by capital constraints. A major turning point came in 2007. Hilton was acquired by Blackstone Group in a deal worth around $26 billion. This was one of the largest private equity deals in the hospitality sector. The timing, however, was risky. Just 1 year later, in 2008, the global financial crisis hit. Travel demand dropped, revenues declined. The hotel industry once again faced pressure similar to what Hilton had experienced decades earlier during the Great Depression. But this time, the response was different. Hilton didn't collapse, it adapted quickly. Under private ownership, the company restructured its operations, reduced costs, and strengthened its core systems. Instead of focusing on survival alone, it prepared for long-term recovery. By 2013, Hilton made a strong comeback. It returned to the public market through an IPO, one of the largest hotel IPOs in history at the time. This marked a new phase of confidence and growth, signaling that the company had successfully navigated one of the toughest economic periods. Leadership also played a crucial role in this transformation. Under the leadership of Christopher J. Nassetta, who became CEO in 2007, Hilton focused heavily on brand expansion, operational efficiency, and digital transformation. His approach was clear: scale through systems, not assets. During the 2000s, Hilton expanded aggressively, not just in numbers, but in brand diversity. It developed a portfolio of multiple brands targeting different segments: luxury, Waldorf Astoria, Conrad; full service, Hilton Hotels; mid-scale, DoubleTree, Hilton Garden Inn; budget and lifestyle segments. This multi-brand strategy allowed Hilton to capture a much wider market, from premium travelers to everyday customers. Another major innovation was the expansion of its loyalty ecosystem. Hilton Honors. This program connected millions of users globally, offering rewards, seamless bookings, and personalized experiences. It transformed Hilton from just a hotel chain into a customer ecosystem. By the late 2000s, Hilton had firmly established itself as one of the most powerful hospitality companies in the world. Then came another global shock. In 2020, the COVID-19 pandemic brought international travel to a near halt. Hotels emptied, bookings collapsed, and uncertainty returned to the industry. For a moment, it felt like history was repeating itself. But Hilton's modern structure made a difference. Because of its asset-light model and global systems, the company was more flexible and resilient. It focused on cost control, safety standards, and gradual recovery strategies. And as travel resumed in 2021 to 2022, Hilton recovered faster than many traditional operators. By 2023, Hilton had officially moved beyond recovery mode. Global travel demand returned with unexpected strength. Leisure travel surged first, followed by a strong comeback in business travel. Occupancy rates improved rapidly across key markets, and Hilton began operating at near pre-pandemic levels, but with a much stronger system behind it. What made this phase different was not just recovery, it was acceleration. Hilton didn't just return to its previous position, it moved ahead. During 2023, the company aggressively expanded its global footprint. New hotel openings increased across Asia, the Middle East, and Europe. At the same time, Hilton continued strengthening its asset-light strategy by signing more management and franchise deals instead of investing heavily in owned properties. Technology became a major growth driver in this phase. Hilton upgraded its digital ecosystem, making Hilton Honors even more central to the customer experience. Mobile check-ins, digital keys, and personalized booking journeys became standard. The company was no longer just offering stays, it was delivering a seamless, tech-driven travel experience. By 2024, Hilton crossed another milestone. Its global network expanded further, with more brands and properties targeting every segment, from ultra-luxury to budget-friendly stays. Demand remained strong in tourism-driven regions, while corporate travel continued stabilizing. At the same time, Hilton shifted focus toward experience over infrastructure. Instead of simply building more hotels, the company emphasized service consistency, stronger brand identity, and deeper customer loyalty. This reinforced Hilton's position as a system-driven company rather than just a real estate operator. Moving into 2025, the strategy became even clearer. Scale without ownership, growth through partnerships, loyalty through ecosystem. Hilton continued expanding in emerging markets while strengthening its dominance in established regions like the United States and Europe. Its diversified brand portfolio allowed it to serve every type of traveler, making it one of the most adaptable hospitality companies in the world. By this point, Hilton was no longer reacting to industry trends. It was shaping them. By 2026, Hilton reached a new level of global scale, presence in 120-plus countries, 6,500-plus properties worldwide, 18-plus brands across segments, millions of users in Hilton Honors ecosystem. The company was no longer defined by buildings. It was defined by systems, data, and global reach. From 2000 to 2026, the journey followed a modern arc. Expansion to crisis, to restructuring to digital growth, to acceleration to global dominance. Hilton didn't just grow with time, it evolved with it. And today, it stands not just as a hotel company, but as a global hospitality platform. From a missed opportunity in 1919 to a global presence across 120-plus countries. This is not just the story of a company, it's the story of a decision. A decision made in uncertainty, without a perfect plan, without a clear vision, but with the courage to move forward anyway. Conrad Hilton didn't start with a dream of building a hotel empire. He started with what he had. And step by step, he turned a small, overcrowded hotel into a global system of hospitality. Through economic collapse, through competition, through changing times, the business evolved. But one idea stayed constant: systems over shortcuts, consistency over speed, experience over everything. And maybe that's the real lesson here. In a world where most people wait for the perfect opportunity, sometimes the only thing that matters is what you do with the opportunity you didn't plan for. Because Hilton's story proves something simple. You don't always choose your path, but you can always choose how you build it. And in the end, that belief became a philosophy. Fill the earth with the light and warmth of hospitality. If you want more real stories like this, stories of companies, power, and the decisions that shape industries, subscribe, because the next story might completely change how you see business.